to everyone joining us from around the world. Whether you are just waking up midway through your trading sections or winding down for the night, welcome. On behalf of the entire WeMasterTrade teams, we are truly pleased to have you here with us for this global live stream sections. My name is Daisy and I will be guiding you through the exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the industry room, one of the most fast-growing and forward-thinking funded trading firm in the industries. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our communities. First, let me introduce the ever-composed, always insightful Scarlett. Welcome, Scarlett.
Thank you so much, Daisy, and hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start to how you grow and how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely, and next to her is someone who brings sharp analysis and clarity to every chat and conversation. She is strategic, she's sharp, and she's a real force in our trading space. Please welcome Helen.
Thank you, Daisy, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is that we're going to understand everything, not just what WeMasterTrade offers, but how traders can truly take advantage of parts of our system, from packages to promotion to scaling and long-term profit sharing. If you ever had questions or even doubt, today the day to ask them.
And that's exactly what we're here for. Whether you are the brand new to WeMasterTrade, already a part of our funded trader programs, today live streams is going to give you the full pictures, not just the highlight reels. Over the course of these sections, we are going to walk through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from a traditional brokers or broker firm. Now, I want to be clear, it isn't about self, it's about understanding. We want you to know what you are signing up for, what kind of structure support your journeys, and how you can use that structure to not just success but scale.
And speaking of treasure, we will begin by sharing the story behind WeMasterTrade, how we were forced at a funding project, not a broker, making a very important decision. Unlike broker who profit from volumes or lot, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profit only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail, and we'll explain the logic behind each one and what kind of traders they're designed for and how the structure changes, depending on whether you choose the challenge model or the instant funding model. So if you ever looked at our packages and thought which one is right for you, and today we'll answer that.
And more than that, we will also do a live comparisons between packages. We will break down pricings, account size, maximum drawdowns, profits, consistency rules, and even payouts size by size to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Alright, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what is the data loss limit is, how it's calculated, why it includes both low and floating profits and loss, and how to avoid violating it, especially overnight. We will into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade sizing and risk per trade policies.
And we won't just explain rules in isolation, we'll explain them in context of life trading decision. I'll share some personal example of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they're there to protect the integrity of your growth.
And while we'll work on the topic of helping you suggest, we will guiding you through current promotion plans, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. We have had some amazing response to our promotions, but also some confusions. So we will be showing you exactly what to do step by step.
From there, we will transition into discussion on our scout plan, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in play. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funded one, it's about enrolling into the six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from other platforms. And when you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just a percentage. We'll explain the full payout cycle, threshold, and timelines today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with a large network. That's why we are also taking time to explain our affiliate programs, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of the three referees, rules, and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promotion responsibly understand the term and building a long-term income stream.
So as you can tell, this is not just a surface level live streams. We are diving into everything: packet, rules, promos, scale up packs, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decisions possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderator is watching, and we'll answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and summary below. And you can always reach out to our team with any follow-up inquiry. Our support team is incredible, and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading a profession, not a game. So if you're here to grow, to understand, and to take actions, you are exactly where you need to be. Let's dive into the journey together. And let's begin, and once again, welcome to the WeMasterTrade live streams. Thank you once again for being with us today. Now, before we dive into pockets, trading rules, and promotion mechanics, we want to take a moment to zoom out and offer you the full pictures who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you're putting your trust and your tradings into the companies, understanding its philosophy, each it headphones, essentials. And so the next segment is about the origins, intentions, and impacts. It's about how WeMasterTrade begins, what value underpin the firm, and how those values translate into the real tools and outcomes for traders like you. And to work through that, I'm Joyce. as always by two people who live in the principle, Scarlett and Helen. Let's start at the beginning.
Thanks, Daisy. And to truly understand WeMasterTrade, you need to understand why it was recreated. Like many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, location, or financial situation. So we were founded in 2022 as part of the WeCopyTrade Group, headquartered in Vancouver, Canada. Why WeCopyTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to know WeMasterTrade is not a broker. That's not a label, it's a fundamental difference. We don't profit from spread or commission. Our success directly tied to the success of our traders. That's why everything we will build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We will build a roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our funding principle is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. And that's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently professional.
And that academy is something special, with courses ranging from introductory trading psychologies all the way to advanced risk calculations and multi-asset strategy designs. With the WeMasterTrade Academy isn't just about the theories, it's about the implementations. We've designed the curriculum to match the real-world trading environments within WeMasterTrade. So what you learn, you can apply directly to your funded accounts. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO certifications, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structures, and learner engagement.
And that certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called law firms come and go, WeMasterTrade has positioned itself with a real operational stability, compliance frameworks, and internal accountability. We're not here for a season, and we're here to help build careers.
And we think that commitment translates into the real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, and South Africa, all talking about how WeMasterTrade helped them not just earn more, but to trade with purpose. They talk about passing challenges after a year of struggling with the retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders. We have women enter the finance world after the career break. And we have young professionals from underbanked region finally access the markets with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog sections where our teams of experts and educators share quickly insight, trading psychologies, breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's also talk about the cultures. What WeMasterTrade's difference isn't just the product offerings, it's the community mindset. And we actively promote trader integrity, respectful competitions, and knowledge sharings. Whether you are in a Telegram group, watching our YouTube series, or engaging with us online support, you will see that we actually listen.
And I'll speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and is something we're proud of.
And if you ever doubt whether this path is real, whether the trading career is truly within reach, I encourage you to read to the testimonial, take a look at our funding account, and connect with the people who go through the system. The stories are real, the capital is real, the reasons speak for themselves.
To summarize, WeMasterTrade is the capital allocators, a talents accelerators, and education for trading institutions. We are here to challenge the status quo of trading assets, to build systems that rewards performance over promotions, and to create growth, scalable income opportunity for traders around the world, regardless of their starting point. And this is more than a platform, it is a trading movement. And if you are ready to be a part of it, today's lesson will show you everything you need to know. Thank you, Scarlett and Helen, for that deep and honest walkthroughs. Coming up next, we will go into take the foundations and connect it directly to our actual offerings. That means we will be discussing all the different account packages available as we met the choice and how they differ, who they are designed for, and what kinds of results you can expect from it. Now, let's we explore who WeMasterTrade is and the principle we stand for. It's time to move into one of the most essential parts of the live streams and in-depth discussions on our account package. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their style, and their current skills level. And when we say pockets, we are not just talking about dollar figures. We are talking about frameworks. And each pocket at WeMasterTrade represents a different pathway to work growth. And today we will walk you through all of them, what they offer, how they structure, and most importantly, who they designed for.
And exactly like Daisy, at WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
Okay, let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before we can allocate capital. It's structural, fair, and has become the most popular rules for new traders entering the WeMasterTrade ecosystem.
Well, in the challenge model, you begin with a simulated account and your goal is to meet specific profit target while staying within strict but reasonable risk parameters. There are three stages in total, phase 1, phase 2, and then the funded stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
So in phase 1, you need to achieve a 8% of profit target, which is $800 without breaching a 5% daily loss or a 10% overall loss limit. You have unlimited time to achieve this, and that's a key difference from many platforms. We don't pressure you with deadlines.
And once you pass phase 1, you will move to phase 2, whether your profit target drops to 6%. That's a second rush. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
And finally, once both phases are clear, you enter the funding account where you trade with real capital. There are no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
This account is ideal for the newer trader or experienced trader who want to start with a lower pressure and learn the system. If you're still refining your strategy and want to get a feel for WeMasterTrade risk framework before scaling, this is perfect package to begin with.
Now, for those who are confident in their strategies and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenge packets. The structure is similar to fee, the same 5% daily and 10% total loss limits, but the profits target scale proportionally.
For example, in a $50,000 challenge, you need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
The 25,000 and 100,000 challenges are ideal for traders with more capital management experience, especially those looking to the eventually scale into a larger funding account. If you already passed the order broken challenge or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for $10,000 challenge. This fee refundable once you become funded and meet minimum performance conditions. And if things don't go your ways, you are eligible for a 30% reset discount to start fast. And if you don't want to through a challenge at all, but instead want to accept real capital immediately and get paid based purely on results, that's where our instant funding package come into place.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced selling trader the chance to trade real capital from day one. No evaluation, no demo stage, just pure live trading, backed by structure, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we're going to walk you through each of the 5 main instant funding packages: Standard, 51010, 510 510 no BC, and Customized, and we'll compare the details, but more importantly, we'll help you figure out which package is right for you.
Let me see the scans quickly. All of our instant funding package give you live trading access from day one. That means no challenge phase, no evolutions. You pay once, follow the rules, and you are trading like capitals. And every account, no matter the size, includes no time limits, up to 19% profit shares, balance bay limits, scale up plan towards $1 million, support for EA swing trades, scalping, and even XSD. Now let's go pocket by pocket, and as we go, Scarlett's talents, I want to use jumps in the with the real advice. Who should actually choose which ones and what kind of trader you are even seeing success with it.
So let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You are getting up to $200,000 in capital with a very manageable 4% lock limit and 6% overall limit.
It's like that scam steady account that doesn't put you overtrade, and with the profit split up to 90%, there's still earning potential even if you're taking a slow, steady approach.
And how about the commission?
We are competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $1, and stock at just 0.07 per lot.
And everything it allows: new trading, scalping, weekend holding, EAs, SFT, you name it.
So for the audience, if you are someone who trades regularly, understands your strategies, want a full range of access, and plans to play the long games, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their ass and don't want to struggle with the target-based challenge. And if you ever had an account low due to unrealistic rule, you will find the standard model refreshingly fair.
And I also say it's good for swing traders. The 4 and 6% risk profile gives just enough flexibility to hold multi-day positions, especially in weekend holding fully allowed.
Alright, moving off gears, let's talk about the 5 10 10 package. Same capital sellings up to $200,000, but now you get 5% daily loss and wider 10% overall limits. Why does that matter?
That execution is massive for trader who scale into position or take multiple in try per setup. Your gross more room to breathe, especially in a high volatility market.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get the full support of scalping. EAs and niche trading is very traders friendly.
This is not for day trader, especially though trading a stock like Nasdaq or gold. That's move up. If you got a test intraday strategy and just need some retracement room to your pocket.
And also for traders who want structure but don't mind having a profit target, the clear milestone motivates some people, especially if they're payout oriented.
Now here a personal favorite. These 5 10 zeros, you get 5% dailies and 10% overloss, but no profits targets, none zeros.
And that's a blessing for high precision traders. You're no longer chasing a number, you just focus on protecting equity and growing capital slowly and steadily.
This one is loved by low frequency trader and sniper. If you enter 3 to 5 trade a week, this is your speed. You're not supposed to lie for patient and you will actually reward for it.
And veterans, swing traders, risk conscious traders, people who prioritize consistency over speed. If that's you, you thrive here.
And let me honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their hope.
Now for the rule breakers or raiders, those who don't want to be evaluated on how even their profits are. The 5 10 10 no PC, remove profits consistency tracking, right?
Exactly the same 10 risk profile, but you're not required to keep your profit growth mode. One big winning day is totally fine.
That said, trade copier are not allowed in this one, so it's for manual traders only, and you need to trade responsibly. And for aggressive trader who sometimes hit big spikes, this is the place.
It's perfect for high-risk reward trader or anyone who has issue with consistency rule at other firm. You trade how you want and just keep it inside roll down box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
So you can adjust date loss, overload loss, and to your liking. Plus, you can fund up to $400,000 more than any other account.
It's more premium, flexible, and come with all trading style allowed, including EAs, new trading, weekend holding, SFT, and more. Tactile professional acts as fund trader, signal buyer, a pro buyer, high volume trader, anyone with a specific structure in mind. This one will let you build it.
And I always say, if you try other models and nothing quite fits, build your own blueprint with customize. That freedom is rare.
And to sum up, every instant funding package we offer comes with a clear risk parameters, fair commission, deep market access, and real profit potentials. There are no time limits and payout starts as early as 1 day in.
And no matter your strategy, escaping, swing, algo, or manual, there's an account that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. That the right is always out from the biggest promise.
Up next, we will walk you through exactly how to protect your accounts, avoid breach, and understand the key risks and consistency rules that power our entire platform. And alright traders, now that you have seen the pockets, let's talk about the parts that either make or break your accounts. That's right, it's time to dig into the trading rules and how to actually stay compliant once you get funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the numbers one reason traders lose their accounts, it's come down to one thing, the daily loss limit.
Yes, the graph daily loss is the one rule trader think they understand until it kicked them out of their account at 3:70 p.m. on the random Tuesday.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
Well, it's the maximum amount of loss you're allowed to incur in both flowing and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's really important distinction, and it's what trips a lot of people up.
And let's walk through live symbols. Imagine it starts of day 5, your balance is $105,000. Your equities, however, is higher, $107,000 because of opening closing profits.
So if you're on a 4% loss limit, we calculate it off the higher number, $107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can drop below the 102,000 and or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating close and you haven't closed yet, if your equities is below that threshold for an average second, that's it.
Now let's reserve it. Say at the start of the day 7, your balance is 100,000, but your equity is 99,000 because your open trade are slightly in loss.
And since balance is higher, we base 4% on the initial balance, so $4,000.
So now your equities must stay above $96,000 throughout the days. If it's dropped to $95,999, auto liquidation kick in, no warning, no margin call.
And what happens if you break it? The system will send a market order to close all trades. Everything is liquidated. Your account is disabled and you can trade again unless you purchase a new packet.
And here's the kicker, the auto close happens when the system detects the threshold will cross. But due to market fluctuations, your final profit and loss might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidation.
So even if you only intend to take $3,900, once the slip expires, in goes or ends as DAQs and suddenly it's a $4,200. That's why we say don't write the X.
Alright, let's talk about how to avoid violating this rule because this is where the bull market kicks in.
First step, know your buffer. Never blame trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can stress this enough. Most traders stay at their balance all day, but if your floating loss is wrecking your equity, you're heading toward the violation.
Tips 3 is use a dashboard or trackers. Inside WeMasterTrade, we provide a risk dashboard that shows your live loss status. You don't check them, don't rely on memory.
And also post trading after a big loss early in the day. If you lost 3% in the first hour of London session, well, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during new hours. If your trading goes during NFP with a full loss side, you're practically back into break the daily loss rule, cut the position size, and ride for volatility.
So what are the top rookie mistakes you see when it comes to daily loss?
Well, number one, over leveraging. Traders open positions that are 5 to 7% of their account thinking they close quickly, but if the trade turns red fast, it's already too late.
Number two, holding overnight without checking explore. If you are trade overnight and wake up to a city pivot up, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter. They are not. Remember, equities include both floatings and closed positions. The total equity lies in your score.
And I always say this to new traders, the daily loss rule isn't your enemy, it's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly, it's for the ceiling. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't just about the rules, it is just WeMasterTrade funds you because we trust that you will manage risk responsibility. The daily loss is there to protect that trust on both sides. And that is about the daily loss limits. We are taking a short break and we will right back later.
Trade.
Welcome back, traders. In previous segments, we covered daily loss rules, and if you haven't already clicked at once, you are missing out. But now we move from the daily boundaries to the absolute boundaries. I'm talking about maximum loss rules, also known as your account stop loss, the lines that can't be crossed, not just for the days, but for the entire life of your accounts.
And this is where a lot of traders slip up, misunderstand how the rules work. They think, well, I didn't hit my day limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
So what is exactly the maximum loss rules? Let's define it simply. The total loss maximum accounts amounts you are allowed to lose across all trades for the entire account. If your equities, that's your real-time capitals, including open trades, ever drop below certain percent of your static balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative and you can lose 2% one day, 3% the next. And if your total loss crosses the line, that's it.
And let's walk through a counter trade examples. Suppose you have an instant funding account with an internal balance of $50,000 and your max lot is 6%, which is $3,000.
And that means your equity can never go below $47,000 ever. Doesn't matter if you make $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And just to be clear, it's not about the net gains or loss across trade. It's about where your equity stands in real terms relative to that stop lot floor.
And here's where it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in profit.
Exactly, if you have $4,000 in total book for, because $51,000 minus $47,000 equal $4,000. So your profit gives your cushions, but the floor never moves.
And again, like with the daily loss, if there are volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it breaks, the account is permanently disabled. You will need to purchase a new pocket if you want to continue trading. No resets, no rollback.
Well, first, track your total close losses every day. You should always know how close you are to your maximum loss limit floor. Don't wait for the dashboard warning, calculate it manually.
And the third, manage your floating loss acceptably. Even you are possible overrules. A single trade with poor stop placement can take you from safety to shutdown in a few minutes.
And fourth, stay cool when you're close. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entries. And second, traders who trace recovery after a bad day, then they lose 4% in one day, come back swinging the next day thinking they'll make it back, and instead of take another 2% boom violation.
And the third, and this is one, hurts ignoring setback during major news. Even with a tight stop, new candle can get few trades through your limits.
So the max loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
As WeMasterTrade, we are not just giving capitals, we are teaching structures, and the max lot rules is what separates gamble from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It calculates using equities, not balance. It includes both close and floating losses. And once breaks your Kelsey guns. And coming up next, we will explore the consistency rules, why steady profits matter more than big spikes once it comes to growing, scaling, and getting back.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we will talk about the daily loss limits, and we just cover the maximum loss rules, two pillars of protecting your capitals. But now it's time to shift gears just a little and talk not about risks but about the results. Because here the things is not just about staying alive in the game. As we WeMasterTrade, we want to see traders grow, scales, and actually earns. And to do that, you need more than just a winning days. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
So let's define it clearly. The profit consistency ratio is the measure of how even your profits are from day to day. The more balanced of your profits, the lower your ratios, the less consistent, meaning you have one giant profit days and then the smaller or losing rate, the higher your ratios.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. And what we want to see is traders who make profit day after day, even if it's small, and that's what we can scale.
So the formula is the best day divide total profits multiplies 100 equal profit consistency percent.
And just to be clear, best day refer to your highest close profit in a single calendar day, and total profit is the sum of all your close profits minus any close losses or over losses across the life of the account. And that means your total net profit across 5 days is $410.
And your best day was day 2, that 200 profit.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though the trader is profitable, they are not consistent enough. They have one big day that makes up almost half of their total profits. That is not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it not just about your carriers with WeMasterTrade only, you are consistency over time. Traders also love to balance and one who gets power, who gets fear, and who gets stress with no capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your bad days you can save 20% of your overall profit. And how do you do your consistency? Let's say your overall don't have any figures disqualified. You just need to keep trading and keep out growth.
And here's how to do that. First, you need to trade smaller size for a few days. Next, you take smaller controlled wins and for $200 and $300 days. Next up, you need to avoid big swing trades that could spike your ratio again, and last one, spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The box might be profitable, but it won't pass its rules unless it configures with payout logic in mind.
And mistake 2, overtrading after a big day, thinking I'm safe now and trying to squeak more instead of averaging out that high ratio.
The mistake 3 is thinking the rules is just harder. It's not. It's a reflection of what we actually look for in our master trader.
And at the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can't be consistent with $25,000, what happens when we give you 100,000 or more?
And we've seen it's times and time again. The traders who respect the rules, they are ones who get multiple payout, referrals, and grow into six-figure funded accounts.
So, and remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates the profit consistency ratio automatically. You can check it anytime under your statistic tab.
To recap, this rule is about the balance, not volumes. Aim to keep your best day under 20% of your total profits. Spread your wins across multiple sections and monitor your progress in the dashboard. We will work through the daily loss limit, take the maximum account loss, and examine how profit consistency shape your long-term payout and growth. And now we arrive at the finals and the perhaps most overlooked rules of all, the risk consistency rules, or what we call the discrete line test.
That's right, traders often think biggest enemy is the market, but truthfully it is inconsistent, especially in how much you're risking from one trade to the next.
The rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling and WeMasterTrade, this rule is non-negotiable.
Let's break it down. As its core, the risk consistency rules is simple. You are not allowed to risk more than 2% of your entire account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some account, like the 510 novice packet, this will get even stricter. There, the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcomes, it's about the progress. The more erratic your position sizing is, the more volatile your equity curve becomes. That's what makes you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevents large equity swings, and make sure your edge plays out over time.
Think at your account habit. If your position size pulls up and down, a 0.5 loss one day, 5 loss the next day, the system flag is that's not structure, that's cover.
This is where it gets technical, but stay with us. The term trace idea isn't just one others, it's a group of trades that share the same logic.
If you open three buy position on AUUSD gold at different times and you close them within 3 minutes of each other, that's one trade idea.
Because it's the same symbol, same direction, and global one same time. Even if you open them at different time, they seem at a single acquired position from a written per pattern.
So the system doesn't look at your trades in isolations, it's grouped them into logical bundles and apply the 2% rules across the entire bundle.
And what's allowed, you can have multiple separate trade ideas as long as each one respects the risk limit.
First example, if you go long on gold, short on GDP, JPY, and short on USD, and each position have its own distinct direction and the side. You have three separate trade ideas, and each one can read up to 2%.
Let's say you go buy on gold and you will buy against and against. Now you now have three open positions in the same direction on the same axis.
Yeah, the system trades that as one trade idea. So if it combines floating bridge or even just a lot from the position is 2% of your starting balance. Boom, you got broken rules.
And another mistake, opening multiple gold buys, then closing one 10 minutes later and two others together. The system still group trades close within 3 minutes of each other, so be mindful of your close timing.
Let's go hands on. Suppose you have a $100,000 account. The 2% max risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So you open two gold buys, one lot each. You don't place a stop loss. News hits, market drops 100 bips. Each lot lose $1,000. That's $2,000 total.
You're right on the line. If sleeper or spot at a few extra dollar, that's it. We're broken enough or what liquidated depending on enforcement model.
And on some accounts, especially instant funding account with stricter tolerance, these breaks may result on loss of funded status or immediately closure.
And some tips to stay with consistency. Tip 1. Set your loss line based on account risk, not emotion. Know how many pip equal to cent.
And tip 2, use stop loss order religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3 is don't stack trade without calculating combined risk. Just because one position is below 2% doesn't mean three of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same startup, just it as one side it accordingly.
Tip 5, if you want to split an idea into multiple entries, do it smart. Scale in smaller, use micro loss if needed, keep the total exposure below 2%.
And the more common reason trader break this rule, stacking multiple in try on one trade idea thinking is still separate.
Well, second, opening high-risk trades after wins, assuming they play with house money. Spoiler, the market doesn't care.
Third, in neglecting floating loss, a trade may not be closed, but the floating rate still counts towards your 2% risk.
Well, this isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly, we're not here to micromanage you, we're here to grow
traders who internalize these rules, who understand that smart, consistent risk is foundation of scalable capital. Those are ones we pros. Those are the traders who go from 25,000 to 1 million.
And if you want to be a professional trader, you have to think like one. And professional traders always know how much the risk going on every day.
And if you're still guessing your last side or opening trades because the setup feel bright, take it at your side, set it up, get started.
This is more than the rules, it is habits. Build it now, and the path to bigger capital, longer payout become way more predictable. So that's my friends wrap up to the 4 essential rules trading as WeMasterTrade: daily loss, maximum loss, profit consistency, risk consistency. Mastery, you are not just staying compliant, you are building a foundation for serious capital management, long-term payout, and scaling. So you are watching the official WeMasterTrade live streams, and the best is still to come. Alright everyone, this is you will make it through the risk rules and the profit conditions and the structure of our accounts. Now let's talk why it's all worth it. Because at the end of the day, we know that every trader really wants.
Well, more capital, more room to trade, bigger loss, higher rewards without ever putting your own money at risk. And that's exactly what the WeMasterTrade Scale-Up Plan is built to provide. This is your roadmap to being a small account trader, to managing a $1 million funding account, and it's not fantastic, it's a clear path with defined milestones.
The Scale-Up Plans is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violation, and demonstrate risk controls, we increase your capital allocations. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription models or gimmicks. You don't pay for scale-up, you earn it through consistency, profit, and discipline. And the scaling is aggressive. We are talking doubling, tripling, and eventually scaling you all the way to $1 million in funded capital, depending on where you start.
As WeMasterTrade, we offer 2 types of self-scale-up plans depending on your account type. One is percentage-based scaling, mostly used for challenge accounts, and 2 is amount-based scaling, used in funded accounts.
And let's start with the percentage-based blend. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you're promoted to level 2 where your capital increased by 50%. And from there, the growth is slow. Level 3 is 300%, level 4 is 600%, level 5 is 1,200%, level 6 is 2,400%, and finally, maximum is the $1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles, so the system knows you are not just performing, you are stable.
And now for instant funding account, the scale-up works with a set dollar target, and the plans adjust depending on your initial funded size.
Let's take the 10,000 funded trader as an example. Here how the level look. Level 1 and 10,000, level 2 50,000, level 3 30,000, level 4 60,000, level 5 100 thousand, level 6 240,000, level 7 480,000, level 8